Welcome back to the channel, everyone. On today's video, I'm going to be discussing my most recent purchase, and that is Allied Properties, and it is a real estate investment trust located in Canada, all over the country. I think it's the top office real estate trust that you can buy. We're going to go into why. We're going to go into if the distribution appears safe, especially in this macroeconomic environment that we find ourselves in. First, we're going to go over the basics. Allied Properties Real Estate Investment Trust trades under the ticker AP.UN on the Toronto Stock Exchange. Its distribution yield is currently 6.54%, and it pays out monthly. I know a lot of you guys really like the monthly payer, so here's a great one for you. And if we take a look here on the 5-year chart, we can see the stock has reached a high of $60, and currently it's at its very low point in this 5-year period at $26.76. I recently just bought into this company right at the $26 mark, although this is a fine place to add in my opinion. I think I will be adding more shares in the coming quarters, but we're going to get into that a little bit later. I had mentioned that this is mainly an office REIT because it is, and it is what it's most known for. But on the right-hand side here, we can see the breakdown of properties, and 69% of this REIT is office, okay? So if you are afraid of the office space, this one isn't for you. 4.9% of it is parking lots, 9.8% is retail, and 16% is urban data centers. The urban data centers is a newer segment for these guys. I think it's really cool that they're branching out into this. This is kind of a future trend. Amazon, Google, Microsoft, all these companies need warehouse space, so a company like Allied can provide it for them. Allied is the premier Canadian office REIT, and on the screen here we can see the breakdown by province, and you'll notice that Toronto has 5.2 million square feet of rentable space, and Montreal has 6.5 million. Okay, so these are the two major places with all the rentable spaces. After that, we have Vancouver and Calgary, just over 1 million each, and then Kitchener and Ottawa are at almost nothing. But the point is, this is where you want your real estate. You want the majority of it in Toronto and Montreal. In my opinion, that's where the prime real estate is. I mean, this 500 square feet they have in Kitchener, I mean, what kind of rent can they demand for something like this versus Toronto, right? So you want the prime, best locations, and that's what this company has. We just went over briefly who Allied Property is, and I wanted to pull up the year-to-date chart here so you guys can see that this company is down 40% year-to-date. Now, I wanted to talk about this after I went over who these people are, and you can understand now why this company is down so much. It's because it's mainly an office REIT, and the prevailing thought right now is that work from home is here to stay, and companies will not be returning back to the office, or even if they do, it'll be at a reduced capacity. So I'm explained what the company is. We've went over why the stock price has been beaten down, and now I'm going to go over why I think it's a great opportunity, and we're going to look at the numbers to back it up from the most recent earnings report. This report is from September 30th, 2022, so this isn't like the start of the pandemic. We've been in it for a couple years, and we're coming out on the other side. So whatever numbers we're about to look at now, this is coming off of the worst of the worst. So if the numbers look good now, in my opinion, this company should be safe going forward and will be in great shape. Let's take a look. So I'm just going to highlight some of the key metrics here, and what's important is 90.7% leased space. It's very, very good, especially for this environment. The average net rent per occupied square foot is up 3.8% from the same quarter in the previous year, 2021. So 3.8% increase is pretty good. I think that would make anybody happy. And the total rent growth on renewing spaces is 7.3%. It's actually 8.6 if you include Calgary, but I think that's not really fair. That's kind of just cherry picking numbers. We're going to use this 7.3%. And this is an important number right here, the weighted average remaining lease term in years. So 5.6 years left is the average. That's pretty long. That should make everybody feel fairly comfortable. And one of the most important metrics is the AFFO per unit, because it is a real estate investment trust, so that's up 1.3% from the same quarter last year at 0.52 cents. Now, these numbers are pretty good. They're not 100% perfect, but this is kind of telling me that the narrative that the media is portraying right now, that people are not going to be going back to the office, is not exactly correct. So Even if there's less demand moving forward, we can see that this company is pretty robust. They're doing very well. And let's just say one of the tenants happens to be Microsoft, and Microsoft doesn't need a whole office building rented out 5 days a week. So maybe they rent the building out for 1 or 2, and then Amazon rents it out for 1 or 2, et cetera, et cetera, et cetera. So there's multiple ways that this company can adapt moving forward. What's important is that they do own prime real estate in prime areas such as Toronto and Montreal, like we spoke about earlier. This is a really cool company, guys. I've opened a starter position in it, like I said, and I'm looking to add next year when I have more room in my TFSA. I will be adding to this as long as it doesn't run up too much. So I think that this company is poised well for the future. It is a Canadian dividend aristocrat. There's only a handful of REITs that are at Canadian dividend aristocrat status, so that's really cool. I think they're in the position to raise once again, but you know, these REITs that raise, they don't raise like 5-10%. They give you a little bit. They give you a penny here and there, and that's good enough for me and my portfolio and for my needs. This is a good company. I think it's a safe one to hold for the future. It's not without risk, but this is just my opinion. If you guys think I'm crazy, let me know. If you think it's a screaming sell, let me know too. But I think it's great for my risk allocation. I think it might work for a lot of your portfolios out there. So AP.UN out there on the Toronto Stock Exchange, guys. Take a look at it. I just went over it, the little bird's eye view quickly for you. But yeah, take a look. See you in the next video, guys.